Hi, and welcome to our video series. This is Mitch Argon, broker owner of Calneva Realty. In this session, I'm going to spend some time talking and sharing with you about the 2008 housing market and what we can expect in 2019. So let's start off. Home sold volume. Home sales started to decline on a year-over-year basis about the midpoint 2018. And as you can see here, the major markets throughout northern Nevada, those that pretty much run up and down the 395 and 580 corridor, saw double-digit decreases in the homes sold on an annual basis. This compared to all of 2018 to all of 2017. By contrast, you'll note that in Lyon County, the Dayton market and the Fernley market did not see the same decrease in home volume. Dayton had a healthy 10% growth rate, and Fernley eked out a 3% growth rate. So this change that you see between these two market sections within the region is primarily a function of affordability. As prices have climbed and affordability has become a challenge in the primary markets along the Sierras, you see a decrease in home volume sales. And where homes are more affordable in the Lyon County markets, you see they're positive at least, and double digits in the case of Dayton. Now, when you talk about home sales and a decline of home sales, that's going to directly affect home inventory, which is homes on the market at any given point in time. So in this slide, we're going to look just at January 2019. We're not going to look back at the full year of 2018 over 2017. This is simply January, a snapshot in time right now, compared to January of 2018, month by month on a year-over-year basis. You see a dramatic increase in the homes for sale on the market in Reno, Sparks, and Carson Valley. Carson City managed to buck this trend. I'm not sure why, but you see a dramatic increase in the homes on the market, which is good news for home buyers. In the Lyon County markets, you see an increase in inventory, but not anywhere nearly as dramatic as the increase that you see for most of the markets along the Sierra corridor. So this is directly related to the prior slide. Their home sales volume has continued to keep pace, and so their inventory has not risen as high in the Lyon County markets as you have in Washoe, Carson, and Carson Valley. So all of these things, when you put them together, start to affect pricing. And even though the markets have slowed down and we've seen more price reductions in our marketplace, you can still see 2018 over 2017 had a pretty significant increase, double digits, in price appreciation throughout these markets. And Lyon County is no different, 12 and 13% for Dayton and Fernley respectively. What we will see in 2019 going forward is these markets here that were more affected by home sales volume and an increase in inventory, Reno, Sparks, Carson City, Minden, Gardnerville, Genoa, they will begin to see a slower rate of appreciation, probably in single digits, probably not in the 10+% range. The Lyon County markets will probably be see price appreciation in 2019 at a higher rate, simply based on the fundamentals we just went through. So that was a recap looking backwards. Just a few comments on factors affecting housing in northern Nevada going forward in 2019. Well, affordability is a key factor. We talked about that. Really, that's at the core of many of the slides that we just went through. And so that dynamic is pretty well explained. We'll probably continue to see jobs coming into the market that will have an increase in demand and tend to put some pressure up on prices. The California migration is likely to continue. No surprise there. Keep in mind, however, that even though it will continue, the California markets are going through a change in their real estate markets as well. So they're seeing decreases in their price appreciation. They're seeing inventory builds, much like we're seeing here in the Sierra corridor. And so that will affect our market. So the effect won't be as dramatic in terms of pushing prices as we've seen in the last several years. Interest rates is a major factor. It's directly related to affordability, which we talked about. There's been some changes in policy recently on interest rates. It's had quite a bit of press coverage. The current rates have been rolled back to levels seen during the first quarter of 2018, 1 year ago. Those increases for 2019 are probably going to slow compared to what we were expecting as little as 6 months ago. We do see the expectations that interest rates will rise from around 4.5% where they are now for a 30-year fixed mortgage to somewhere between 5 and 5.5% by year end. So there will be a rise, just not as rapidly as was expected. And the primary reason for that is international tariffs, principally with China, creating some uncertainty in the marketplace, and that leads, of course, to stock market volatility. So there's been a moderating effect on those interest rates. So with all this information, it's important to remind you, if you're listening, that we are still technically in a seller's market by technical measurement. However, for buyers, there are more choices, as you saw with the inventory. But keep in mind, if you're a home buyer, that homes that are well priced, and especially in the lower price ranges, will sell fast. We're seeing that in today's market. Even though the inventory is picked up, if you're below the median price and the home is priced well with a good value proposition, it's probably not going to be on the market very long. If you're a home seller in this market, just be aware that there's going to be more competition, and that's probably going to require you to price your home at market value versus ahead of market value to ensure that you're going to be able to effectively get the home sold in the time frame that you're looking for. So, in summary, we have a lot of charts in the Greater Reno Tahoe Real Estate Report where this information is coming from. Down below the video, you will see a link to the Greater Reno Tahoe Real Estate Report. That breaks down each of the markets, market by market and month by month. If you want to see more details on the trends, please feel free to click that link and take a look. Again, I'm Mitch Argon. I'm the broker owner of Calneva Realty, and I thank you for watching the video. I'll look forward to seeing you in a future release.